Okay, hi there, guys. Now, just let me know if you can hear me loud and clear, and make sure I've got the microphone working fine. Tend to fiddle with things too much, so make sure I've put them back together the right way. So, who we got in today? Okay, Sharon. How are you, Sharon? Good, good. All right, looks like there'll probably be a few more coming in dribs and drabs. So we'll get started. Might as well get cracking. Got a few things I just want to cover today. Not a lot, but we'll get through them. Might as well get stuck into them. Welcome. Hope you had a good weekend. Mine wasn't too bad. It was actually quite relaxing on Saturday, and then we had a family over Saturday night. Had a few drinks. Bit of a relaxing for my wife's birthday, so that was good. And Sunday was pretty much just sitting around the house with the kids, having a bit of a play. So that was nice and quiet. I hope we all enjoyed ourselves as well. Now let's get straight into it. Welcome to Trade Setup live stream. It's the 30th, so looks like a bit of potentially a bit of window dressing for the end of the month. You can see the banks have just spiked up today. There's a few other things that are going okay, and it's notorious for end of month, end of quarter too. Window dressing from funds. So sounds wrong, but hey, that's what happens. So it looks like that at the moment. We're up slightly, whereas the US didn't do a lot on Friday night. They ended the week. Obviously, they kept on to gains, which is a good thing. They held on to gains from the previous session, which I think was quite a good night. As far as I remember, the Dow's up about 260, 70 points thereabouts on the Thursday night. And coming into Friday, they had some GDP figures out, which weren't, I think they were a little bit less than expected, than expectations. So, look, it's not a bad thing though, because I think the major concern is mainly interest rate rises. And if data comes out that's supporting really strong data supporting a potential another rate rise, or the pace of the rate rises, maybe not another one this year. I think they're probably on course for 3 rate rises in the US, but you've got to have some solid data because what are we now getting into May? So you'd probably want to stack up a few solid numbers over there before we look at potentially another rate rise for making it for this year. But they could still add another one earlier on next year. So it's still traders are still looking towards a pace of rate rises over in the US. So numbers come out a bit less than expectations, not quite as strong. Then it's not a bad thing. It's probably not so bad for stocks, but you can see the shares. It's just getting through over in the US. They're getting through their earnings season. Some are doing quite well. Some are not quite beating expectations, coming in a bit off. Um, but all in all, it's a better reporting season. Obviously, you've got the tax breaks that have been flowing through. Um, Adding to the better reporting season. So um, that's supporting it a bit. But don't forget, we are in that extended market over in the US, and that's why we're having these. We've recently had these sharp sell-offs because everyone's, when you've got lack of people on the sidelines to jump in, you're running out of fuel to keep this move higher. Someone, sooner or later, you're going to have to take some profits, and that's what people are probably looking at now, potentially looking at now. And we've spoken about this for quite a while now. Running out of fuel to kick the market higher means that everyone's going to be taking profits, you'd expect, and that's what we've seen the last probably couple of months. So now we're just sort of trying to work our way through. Um, are we running out of? Have we put enough people on the sidelines? Sorry, we're not running out of fuel. Have we put enough people on the sidelines? And does it warrant another starting to build a support base to work up to work a new leg up in the US? Not so. It's a bit different over here. Um, we've struggled to get anywhere near the highs from prior to the GFC, whereas DAX, FTSE, US, everyone else is into new highs. It looks like we've just dropped out. So, look, we'll get onto the charts before I keep rambling on about that. I'll get that. So there we go. So yeah, that's the ASX. We're not doing too bad. We're still overextended where we are, but kicking on okay. Um, So just depends what happens. My feeling is over in the US, bonds are still going to come into play. Interest rates obviously going to put the squeeze higher. Higher interest rates means higher cost of debt for companies. Uh, Obviously, that's going to be factored in. So that's where we might get a bit of a sell-off. And if interest rates keep, well, if you get a good spate of data over there, that's going to flow into higher interest rates potential, which means bonds will be factoring that in and moving higher, or yields will be moving higher. The bonds will be moving lower. And we're right at that 3 to 3.05 mark now on the bonds, which will get up. We might as well kick on that now. That's the yields. I think it's a 10-year note yield. So that's sort of their key. Um, that's their key bond that they look at for yields in terms of yields. So you can see that it is overextended and it's come right into that resistance zone around that 3 level on the yields. And that's a 4. I think they touched on that in 2013 or 14. That was the last time we're at these levels. So the market's head south, spent a lot of time basing higher highs, higher lows, and it's just recently worked its way up into that resistance zone. So I think a lot of people are looking to see if it breaks up through there, there's going to be probably a big flow of, you'd expect a bigger flow of funds out of equities into bonds because you'd be chasing yield. And if it's going to put pressure on returns down the track, company returns and future earnings, higher yields, higher cost of debt, then you're better off chasing yield into bonds, and that's what you'd probably find the bigger funds. They might allocate less to stocks and more into bonds to get that yield, especially if it starts kicking higher. So looking at bonds now, we've got this key level really is down at 2.73. But for me, you can see this initial leg up before we had this contraction lower, and then we started the new leg up from 2.03. You see that leg up, if you extrapolate that out or push that out from this origination zone of this current leg up, that's taken us right up and through that key level around 3 up to 332. So there could be a lot more room to move on the upside. You can see it's pushed up, just fell short of that. That was way back in, what was that, Feb? That was back towards the end of, it's probably about when the market started kicking lower, I think. And then we had this sell-off, only a minor sell-off. It's all in context of this current leg up. It's not a major sell-off at all. It's just really that, higher highs, higher lows. And then we've pulled back. We built another high low within this major leg up. And the anchor level to that is 2.73. So we could easily we've just popped up into that resistance. We could just pull back, build another minor base and have another go at it. We just have to see. We just have to keep an eye on. I think it's very important to keep an eye on these bonds just to see how they go. But obviously, it's all interrelated with the data that's coming through. I mean, it's not bad data. It's just not exceptionally good where it's going to put pressure to the upside. But still, bonds, if you go to a longer term, go to the weekly chart. Oh, we get that back. You can see they've been heading south. We've got this major base in at 130 or 140. That was back when it got down there's 2016, recent lows, 2012. What am I talking about? 16 to 12, yep. So yeah, found that major support zone there. We're just starting to come up into that major resistance zone at 3.02, 3, 4, that zone through here, you can see. So everyone's sort of got focused on that to see if it pops up and through, or do we have this major correction? But I still think this could easily, if you just extend that leg, like I said, that can take you up to there. We could easily break up through there and really, clean up a few futures, I guess, on the bonds, a few stops that could just extend up into that 330 zone before we have another correction or more of a major correction. Now that's going to obviously create a bit of turmoil in the US shares, which is going to flow on to us over in Australia and Europe and everything else. So let's just take a look at where we are on, undo. That's the S&P, and we've spoken about that. Major support down at 25.50. A potential higher low or a potential lower high. At the moment, prices is really just contracting. Okay, so we haven't got confirmation either way whether this is broken out. A lot of people like to say, I'll draw that. So I just want to go over the difference in technicals. Now, a lot of people will say you've got a double bottom there. Yeah, it's a good support zone, but the market's still contracting in. It's still holding, lower high here, and that was after that washout. A potential lower high. So we've got this here, this sort of, you're coming in. It's coming to a point of agreement, but it hasn't confirmed either way whether the market's heading back up or whether it's going to turn and roll over again. So you could easily just sort of pop up a bit more, a few points, 10 or 15 points, say, 2680, 2690 even, have a bit of a spike up. Everyone gets a bit more bullish, and then over the longer term roll over. Now we are seeing the stochastics, this move down is met with a bit more buying, and that's probably the preemptive buying off this double bottom. But it doesn't mean we're looking in here where we can't just contract more, and then from here it'll be all about a higher low confirming and breaking out of that contraction to the top side, or holding that lower high and breaking to the downside. Like I said, at the moment nothing's confirmed, so that's why I'm still expecting. This is a daily. Still expecting quite a bit of work to be done before we really confirm. I think there's a few things we've got to worry about first before we confirm a direction on the S&P. And if bonds do kick up through, like we're just looking up to that 330 range, I'm edging for a move down and potentially retest here or extending that move down. And it's going to be a deeper correction, mainly in the US. Obviously, they've got a lot of heat to come out of that market, and I don't think this is enough. Personally, it could just chop sideways. And that, even a sideways movement or consolidation sideways, is going to take a lot of heat out of the market. And don't forget, it doesn't have to get sold off. So we could, at the moment, we're sort of at that, not really a crossroads, we're really just waiting for something to play out longer term. So we get some sort of direction either on the upside or the downside in the US, which is going to lead us, leads us by the hand, doesn't it? Drags us along with them. Dow, same sort of scenario. Actually, was this the one that we looks could be breaking out? So that, look, that's could be a bit different on the Dow, but the S&P is a broader index, so this could easily just have chopped out here, maybe go sideways a bit, hold, and then roll over from there. We'll just have to keep an eye on that one as well. Dow's actually looking a bit better for a break up, but don't forget it's just top 30 stocks, not the broader index. So yeah, it'll be interesting to see how that one goes. That sort of got me thinking we're going to do a bit of work sideways more than anything. I mean, you look at both the S&P and the Dow. The S&P looks more, still contracting in on itself, whereas the Dow, it looks like it's breaking up out of contraction. But we still got to take out this high at 24,750 to be confident, break up through here, which it technically it could do that. It looks like it could do that quite easily. But we've got to get a couple of good days, a couple of spikes up, and then I'd rather see if we can just clean this up. I just want to clean that up. So just look at this, the moves down. It sort of started accelerating down, and you got this big candle, and we had a couple of down days. I'd rather see the reverse. I'd rather see it edge lower like that, and then a couple of good days, and maybe edge lower a bit, then a big day or a big week. I'd rather see that because that's positive of buying starting to step in rather than it's accelerating to the downside. Does everyone sort of understand what just the difference? This move up here, you can see a couple of good candles. Okay, a red candle, that was some good selling. It popped up. You had another red candle there, a green candle minor before you hit. The next day was red, next day was green, then a red day, then a green, and we've got a few red days in a row, and it really started to accelerate down, back down to sort of below that 24,000. So it's still not looking too positive, too crash hot. And don't forget, you can get Trump coming out of the wings saying anything on Twitter, just driving the market crazy and getting them that fear to come back into the market. But all in all, when you look at the basics of it all, what's the underlying fundamentals of or the macro fundamentals you've got? The US is actually doing quite well. Europe's doing quite well. They're growing. They're not getting the figures, so maybe that growth is contained. They don't need too many rate rises, which is going to make it tougher for earnings down the track. Earnings are doing well, but are they peaking? That's another thing we have to just look at. Are they peaking? If they're peaking, you might get that flow out of. They're going to be looking for yield. If they're not going to get it in stocks, where are you going to go to? And if we had met such a big run into stocks, are we at the end? So there's all these sort of things that are going to be answered yet. All right, let's go to FTSE. Good night on Friday, and the DAX had another good night on Friday. Actually didn't get through the highs, so the FTSE was looking a bit better. Before we go into the XJ, that's Nikkei. What was the weekly looking like? Even that weekly trend is still holding up. Even you got this big correction here, got a bit ahead of itself, probably that push to 24,000, and that's why you got a bit of heat coming out of that market. But it has reacted But the problem is I don't like the V-shaped recoveries where it's just sells straight off and bounces straight back. I'd like to see, and I find there's a lot more confidence when you get, if it sells off, that's sort of your V shape. Then you got that secondary leg down, which we could be looking at here. Who knows what's going to play out? Then you get that. So then you get this sort of congestion, and then you can see that through here we held higher lows around 16,000, and you can see that the range between selling and buying is really starting to come to that point of agreement before it starts breaking to a particular direction. And I think that's what's going to happen here on the Nikkei anyway, and probably a lot of other markets. Hang Seng, this looks like it could roll over and have that extension to the downside. Just have to see how that goes. Let's just draw that up. Does anyone trade the Hang Seng? I know Helen used to. I don't know if she's in at the moment, but a bit of trading. Just wanted to check on this to see. Yeah, so that could easily have, that's your first leg down. It's struggle up near these highs, have your secondary leg down, and come right back down into that support zone, 27, 28,000 before, and that's your secondary move down before starting to find some buying, some consolidation, and then starting a new leg up. I'll have to see on that one there. That's your Hang Seng. So it's just down to the ASX, and again, that's still, the XJO is still, holding that weekly trend. We've got, well, if we take that out, it's looking a bit clearer now. So we've really bounced quite nicely. And you can see longer term, we're coming to that point of agreement, but I still think it's got a bit of work to do, maybe a pullback. If we draw that up a bit clearer. So this is what we've got so far. The market's moved up, pulled back to here, this little spike higher again. You've had that secondary move down, and now we're just coming back up to this resistance, probably finding resistance up towards 6,000. So I would expect that we're going to get maybe a bit more contraction, but I don't quite expect us to break down. I expect this weekly trend to hold and then start to lift again and get that breakout of contraction as you get buyers starting to step up, holding higher lows and working back up and through. What do we get to? About 61.50 thereabouts. But again, just taking a lot more time to get there. Yeah, no, you're right, Lauren. I used to trade the futures on that, and it was great fun. I mean, it was fast. If you're an intraday trader, the Hang Seng can give you some good opportunities. A tough one, you may have to have wider stops, but when it goes, when you're right, you'll know it within a few seconds. It can really go hard. So it's good fun to trade. Yeah, stocks on there, I don't bother trading, it's more the indices. What else we got? So that's it. Let's click over to positions. What we've got running at the moment, we've looked at bonds. We have one currency going at the moment. Just starting to get in a few more alerts. That's not what I've got, is it? I'm on the weekly. No wonder that looks good. So we go to the daily. So we've got a short on the a short on the Aussie yen that's ticked off the other day. It was looking quite good. The reason why I don't mind it at all, you've got this, it's the bigger term structure that could come into play. Well, I'm expecting to come into play. You can see the markets had a big sell-off. It's rallied all the way back up, bit of a pullback, held higher lows all the way up here. Then you've got the lower high in here, big sell-off. Then you've got the market popping up, and this is on the weekly, don't forget. Then it's getting a bit tentative here, and you've got this sell-off, which just broke the anchor level at 81.68. So that's what we're looking at on the weekly. This as to be a major lower high and potentially working its way, even if it gets down to 77, who cares? It's a weekly chart. There's a lot of fat in that trade on the downside. Go back to the daily. That's the move down. That's broken that anchor level at 81, was it 81.50? That's your anchor level broken here. And then we've retraced back into it. So it looks like it's a nice little zone up at 84, say 84 even, as a lower high to keep pressuring that market on the daily. So keep dropping it down. We go to the 4 hourly. It's a bit clearer in the 4 hourly. This could be a nice lower high. You've got a daily lower high potentially here, and that's the anchor level on the daily. So you've got a lot of pressure. It looks like it's building, and this is after that break of that major weekly anchor to the upside. With this little push down here, and it's retracted. and we're starting to get that pressure back on the downside, which looks really good at the moment. Just dropping it down to, it's mainly the 30-minute chart for that entry. It was an entry in here. Then obviously on Friday night it did retrace, but we want to hold a nice big stop to make sure that we're not going to get chopped on these moves, because I had some numbers out in the US. I think it was GDP data which lifted the Aussie. There's a bit of a US sell-off in the US, so it did get a bit of a lift in the Aussie yen as well. I think mainly thanks to the Aussie dollar. So we don't really want to get chopped out, especially on the currencies. You know that they can take out the way you trade stocks, and I think the way you trade currencies is slightly different. Price structure the same, but I think you've got to attack it from a slightly different perspective. So rather than maybe on a stock, you might take a bit of a sell-off through here, break of the lows, and then you hold your stop. They tend to keep going nice, neat, and tidy. We wash out a lot on the currencies, whereas this may not have washed out if it was a stock trade, especially if you flip it to the upside. What they do a lot, they extend into a zone, they wash it out, and they can clean out those sellers just in here, the shorter term ones, with this move up, and then it comes starting to press back down again. So we can see it's just starting today. It finished somewhere up around that 82.70 zone. We were short from about 82.46, I think, and it's just starting to press down now. So we're only a few pips behind, but we've got our stop. I think it's up here. I can't quite remember now. 83, 82.98, 82.90, somewhere. I think it's just below about here, 82.95 to 98, somewhere like that. So we've got a nice wide stop, and if it does get up obviously through that level, we're completely wrong, because you can see that market's contracted lower. If we hold a higher low in here, and we start bouncing around and look to chop up through that 82.71, we might just close it out, because it's not playing out to plan. But that's all in context. You've got that major context of the daily, the weekly, everything's looking like there's quite a bit of pressure on the Aussie yen. So if we can get that moving south, taking out these lows, we've got our first point of call of maybe 82, and then I think you can work it down. If it breaks that quite easily, that 82 zone, I think you've got right down to sort of at least the previous support at 81.55. So there could be quite a bit of fat in this one here in the Aussie yen. We'll see how it goes. What else we got? Go through the others that we have running. We've just got WHC, Whitehaven. That's picking up again. Entered a long at 70 with this pop up here. Of course, it's popped up, had a pullback, but it's still, this is the trend. This is the price action I like. Probably see it better on the weekly. You can see we've had this move up, contraction, a little pop up, bit of a pullback, but it held higher lows and you had a new leg up. So what I want to see, this is a major, it's a good little correction. It's held that higher low on a weekly. The high low on the weekly is confirmed when you get a break up through $5. But looking at it on the daily, you can see that heat's come out of the market. It's cleaned out a few of these late traders. Then it's held up through 410, and we started holding higher lows, and we started moving back up again. And you can see that contraction lower. The anchor level was really this little lower high here, which it broke back on the 21st. Then we pulled back, built the higher low on the longer term off the dailies, and we're starting to head up. So we're just looking for that to continue up to that $5 zone, potentially break up and through 5 and just continue on. That's Whitehaven. That's obviously behind slightly, but you know, the price action is what we want, the price structure. That's what we're trading off. The trend is up. So we just want to see if that can just continue on. BPT is going well. That, again, we spoke about this, looking to get a bit stretched. You can see the stochastics are quite high. Weekly's coming to that overbought zone, but it's got the potential to spike up to 170. So I just want to hold on. If it gets to 170, it's really looking stretched and it hasn't had a minor pullback on the daily, then I'll be inclined just to close that out and call it a day. I think it's going to be a tough ask to get up to 170 and just blast through that, because you can see how much sort of overhead resistance there is through here. It's traded there one, fell a bit short here, traded back up there. I know it's well over the longer term, but that's still going to become a little zone where we could get some selling profit taken locked in, especially if you've held it way at 50, 60, 70 cents. If you held it before we got in at this zone, if you held it way back here and you've been holding pretty much off those lows and it hasn't looked back. If you bought it just in here, that prime little zone at 70 cents, if you bought that in, you're just following it up, looking for it to press up to 170. It's probably not a bad zone at all to take some off the table and book some gains. So that's BPT. Again, I think we're getting late into the move. SM1, that's looking good. still, again, it's a bit of the same. It's getting a bit late into that move. You had this move up here, a lot of contraction, a lot of heat taken out of that market, and you get that little pop through $6 twice, here and here, before we started lifting again, and it really hasn't looked back. We've held high lows all the way up from pretty much $6 to 9, above 9 to where we are now. Now, if this pops up through, I'm inclined to raise my stops. I tend to cheat a bit. If anyone's been watching the way we trade or what we do, um, generally I'll mark it up. So I don't want anyone to think we're doing the wrong thing or the right thing. Actually, I'll get on to SM1. So I want to draw this up just to show you what I mean, what I'm trying to talk about, what I'm babbling on about. FBR will do. All right, so generally, say you bought it here, for instance, and you've seen this leg up, you've seen all this contraction, the market's really cleaning out a lot of buys, you've got a clear support zone through here at $6, and then it started lifting. Say you were looking at here, you got this little perk up, and you go, oh, hang on a sec, it's just touched up on resistance, and it's touched down in that support zone again, and started lifting. Say you bought it through here, all right, your first stop would be down there. So that's you've got your entry, and then you've got that the market went on with it. Great. It got up to say 750. And then we had our first pullback. The first pullback was here, then it started holding up again. Now, you wouldn't raise your stop at this stage. You wouldn't raise your stop to here with this move up through, say, 725. That's not the way I do it, because it could easily just chop up there and then have a deeper correction and then start to go again. And then you've missed out. You get stopped out. On a break-even trade, say, just by moving your stop a little bit too tight before the move's actually started, or just when it's starting. So I think when you tighten your stop up here, it's a bit different to tightening your stop up towards potentially the end of a trade. So I think what you're trying to do, it's all, we've spoken about this a lot, I guess. You're trading, well, for me, it's about probabilities, the probability to move. What's the probability of the move? Is there much fat left in that move? And that's why you're trying to analyze different time frames, different charts. At this stage, you would say, okay, if we started at, I don't know, say from about $4 up to 7.25, you got a $3.25 move. If you're looking at this starting to edge up here and you looked at it at this zone, I just want to do this in a different color. That's your entry there, and you're looking for it to perk up. So you're trying to extrapolate of where we could be going to. So you're adding, what did I say, $3.25. Add that to 6, it's $9.25. So about where we are now. So if you're extrapolating that and you go, if we have an equal move up that we had in the first leg up before we had that major correction on your weekly basis, I don't want to tighten this up because I don't want to get chopped out at the potential start of a move. All right, so that's why I'm inclined never to tighten my stops up. I want to see, I'm only going to tighten it up to here if we get the break up through 750. That's confirmed high or low. That's confirmed, and then you move your stop to, you can move it to just below 7 or whatever that low was here. That's a high low, and then it pushes all the way up here. So you are going to give up a lot. You can look at that. It's got to $9, and you still got your stop at 7, or say 675, and it may seem like it's a long way, but there could still be a lot more left in that move, and you've got it gapped up. That's quite nice. And then you've had a big pullback, and then you've had this move all the way probably to only, what was that, about mid-April, before it confirmed this is a high low. All right. So that's where I had my next stop. At this stage, it's a bit different to at the start. The start of the move, you want to say, okay, we're getting close to that 925 mark. I don't want to close it out just because it hits 925. What I want to do is give myself a bit of room to move. This could easily extend. It could just keep going. Just because we've had this leg up doesn't mean it's going to be equal and opposite. For the next leg up, it could just be harder. Anything could happen. So you don't want to close it out just because we hit 925. But because I was talking about probability, the probability of this still going, it gets lower. So the probability as you start moving up becomes lower. So it's like a bond. The bond prices go up, but the yields come down and vice versa. So it's the same sort of thing. I'm looking at this probability term. So I'd probably be happy to lock my risk in a bit tighter, considering I think we're starting to get a bit extended. If you go down to the weekly is in that the stochastics right in that overbought zone. So you got to really sit down and say to yourself, how much more can we move higher? Sooner or later, we're going to run out of buyers to continue the move up. We're going to run out of that fuel to continue that move up. And I don't want to be leaving a stop way down here. So that's why if anyone's been following, we've been moving it up. I think it's currently at 810. But the fact that we've had a couple of good days down and we're starting to look like we're lifting, I'm inclined to move that just below that lie, say 875, lock in a bit more gain. I mean, if it does come down and stop me out, so be it. I've probably got the bulk of the chunk of that move up. And if it does go higher, if it does get back up through 950, so be it. We'll look at something else. It doesn't really matter. It's been a good trade. And I think what we're trying to do is get the bulk of the move, not just try to get every cent out of it. And I would never sell. Like, I don't like to say, okay, we get to 950, I'm just going to close out the rest, because if you look at a weekly, that'll be in the clear skies. It could just keep going. So you don't want to cut off your chance of it. Just keep going and start just to, for the sake of booking, closing off the trade. You just still want that last little bit to go for the upside. If it's a strong market, it'll just go. You don't have to worry too much about your stops. But if weakness starts to come in, you're going to start to see some lower highs, and that's what we may be. I mean, if that's the case here, if this doesn't break up through 950, that's going to be a lower high. And then I'd potentially expect a decent correction. You can see that's just about, I'll just clear this up a bit. You can see that that's probably not a bad zone. If you put it at 875 and it comes and nabs us, you probably find this leg starting to roll over. And it might be oily. We might get a better chance later on as it pulls back, pushes back to 925, and then rolls over and has a massive, deeper correction. We might have been could have refined that, but then you're taking the chance that you're seeing it breaking down and it has to pop up for you to get out of the remaining, and then that it could just go straight down, and all of a sudden you're taking yourself out at $8 or 775 if it just capitulates. Does that make sense, guys? Just what I was trying to say. I mean, at the start of a trade, so you're in this zone, the probability of it moving higher, once you've got your higher low, the probability of it moving higher is you've got a higher probability of success of locking in a good trade, of it going higher, than you have, say, up here. There's a lower probability that's going to continue higher because of all this move, all this buying that's taken place. Buying is stepping in. It's soaking up whatever buying's on the sidelines that want to come in. It's soaking them all up with the high lows and that move up. As you start getting the extended zone on the weekly and the daily, you're probably soaking up all that buying pressure that potentially comes in to give yourself more profit. So it's really just trying to work it from a probability perspective of how much more you've got in the move, and whether you should be tightening your stops up or whether you should be giving the trade a lot more room to move. All right, that's all I wanted to touch on for those, I guess. What else we got? So we'll go over to FBR. Start chucking in some trades if you want, guys. I know, actually, I'll get onto one. Helen was mentioning one in the forum, in the chat we've got to Discord. She's at QAN, I think, Qantas. Now, anyone that's a bit of a Qantas fan, just be wary. This is not gonna turn into be careful that this could easily turn into a major lower high. So we could get, now, looks like I've just dropped out a couple of times. We're all good. Yep. Just be careful. Looking at that weekly, quick analysis of that. And Helen, I think, was saying that it certainly looked toppy up here, and you can see, you just put it in context of what you had this leg up, you've had that big move down, and this is from a price action perspective. For me, it's highly likely this is a major lower high. If this is a major lower high, you've got to probably just look and see where could we be going to. All right, and this could easily just extend that. It could get down to, say, 450 from here, or 425. It could extend a bit lower to $4. But looking at the weekly, you've had this move up, and it didn't look back from here. That was one, complete leg up on the daily without, actually, what is it on the daily? Oh, I had high lows. Whoops. Yeah, it was quite a good trend. I mean, it really didn't look back. You had a couple of red candles, but they were really, far and few between as the market got all the way up. So if we go back to Our chart on the weekly, that was one leg up, and you've had your first serious correction, pop back up to the highs, another half decent correction before we took out the highs and we got up to say 670 thereabouts, these highs up here, before we come all the way back down and we broke that anchor. So that was your anchor at that stage for this move up, this longer term move up. It broke through the anchor, and then we start to retrace. We're back to that overbought territory as what we were before, but we couldn't get anywhere near the highs. So just remembering, if it was a strong market, you would expect that to be up near 650, at least a double top, but it's not a strong market because it's struggling around that $6 mark and you're getting pressure on the share. So for me, the way I'd be analyzing that, I'd be looking at it going, oh, look, on a weekly, it's not looking good. If it breaks down through here, and you could probably do that on the daily, I think there's going to be a fair bit of selling. Clicking down to the daily, you can see we've got that key zone at 570. If that breaks, potentially this could be a short. You're looking for a bit of a bounce, a lower high. And don't forget, the weekly is an overbought. The daily's the opposite side. It's oversold. It's getting oversold, extended down here. So I would be looking as a trade. If we draw that up, that's our support on the daily. We've come down, we've popped back up, we've come all the way back down again. We're oversold here. I would be looking for potentially a washout. And if you get that push down and then you can traction and then you can get a lower high to work from, I'd essentially be looking for a bit of a short on that. So I think what you'll get coupled with the weekly is you get the daily set up as well. So the daily is getting towards overbought. It doesn't have to go to overbought way up here on the daily. It doesn't have to go way up in the stochastics, but just not in that oversold territory. So if that breaks through that 570 and it pops back up, builds another lower high, then you get the weekly's broken that anchor. You can see with this move down. We've had that contraction. We've got a major lower high, and then the lower high starting to break down with a push down through 570. So everything's starting to add up for a nice little short trade. And then from there, it's just to see where it goes. I think that's one that Helen had on the cards as a bit of a weakness entering into the market. All right, so let's get into it then. So what's the first one? FBR. So FBR, we had, let's go back to the weekly. You can see the weekly, you've got this move up. Probably don't need to draw that. You had a good little move up. So you go, if you're originally looking at it at this stage when it's up near the highs, you wouldn't buy it. You want to see the heat come out of that move. And what's happened? The market pulled back, the heat come out, and it started popping up again. And then you got a higher low just in here around that 10-cent mark before we got the next spike up. So at this stage, what we're analyzing, we're looking for this to be a prime zone for another leg up. We don't know if that's going to happen, not through 30. It's going to take up straight up back through 30. We don't know what's going to happen just yet, but that's looking like it's a nice zone on the weekly for a higher low to build, buyers to start stepping in and to push that market higher and potentially get this type of leg up again, even if it's just an average. 10 to 30, that's a 20-cent move. Potentially, even if you take a 15-cent move from 15 up to 30, that takes you back to the high. So if it's 20, it'll take you to 35, thereabouts. So it could easily, that weekly's in a nice little zone. So if we go down to the daily just to see if it is potentially setting up, what we were looking at, obviously you're drawing in that weekly zone, say through, well, that's probably a bit rough, but through that 14.5 mark, it's touched down there, 1, 2, washed it out, and then if this is a weak market, don't forget this little push down. It only broke this previous low by a half a cent or so before it had to retrace pretty much all the way back up to that lower high. Had another go, fell short, only got to 14.5 cents. So I couldn't take out this sort of little extension through the previous low. Couldn't take out before it started lifting. And then we got this move up through that previous couple of lower highs, and we got a pullback, built a higher low, so that's nice, and it started to lift from there. What we were looking at though is rather than getting with a push up through, I think it was about 18 cents, it could have easily just, this is what we were looking at. And that's the reason why I didn't want to go and enter with a push up through 18, because it could easily fell short at 19.5, say, and then rolled over. All right. And continued these lower highs, the pressure down, and then start to take out 14, have a deeper correction. You know, could have got all the way back down to 10 again. We don't know. So I want to see obviously my first part of my trade setup is to see it break up and out of contraction. So by contraction, we mean this move down with lower highs, you know, lower lows, this move down. I want to see it break up and out. So that's strength in buying, starting to push it up out of contraction. That initial thrust up, like we've got here, is I don't buy it just on that breakthrough there because it's too, I think it's too risky. I want to see from here, I'll change colors on that. What I'm looking for is that pullback. So I'm really just looking for that pullback and that higher low to build. And I want to see if I can get that. We've had one day, was it Friday? Good little sell off in 21. So maybe we get this type of action. So ideally, we've got the first stage of a setup. We've got that break up and out of contraction. So it looks to me, the bulls are starting to win. All right, the bulls are putting pressure on the bears. They're starting to push the market up. They're getting more confidence. They want to see that that's in a prime zone at that 14.5, 14, 15 zone to be a major higher low on the weekly basis. And we're getting that push up out of contraction. So I'm really just looking for a higher low from here. All right, if you go through here, it could pull back to 18. We might get, and it doesn't have to be that 2 moves down. It could just be a pullback, and then you get this minor level. Then you just got this high low to work off, an inside high low, and see if it can work up like that. Does that make sense there? So really, Sharon asked, yeah, that's what I'm on. I'm waiting for that now. Initially, I think when we sent out the alert, it was below that 19 zone. So I really just wanted to see. I wanted to see if this was the zone where it's going to be a major high low on the weekly. And for me to be convinced of that, it had to break up and out of this contraction from 30 cents. Now it's done that the last, what was that? It was Friday, Thursday. I think it was Thursday or Wednesday. Wednesday, Thursday, a couple of positive days. It pushed up out of contraction. So the next stop is the higher low. All right. So that's really all I'm sort of waiting for on FBR at the moment. It's a small trader. You have to make sure that if you're going to jump in for that one, it's got enough. It's got a bit of volume on there, so you can get. It doesn't have. You can see by the offers there. If you're buying it, it's still a couple of hundred, 300,000, say at 19, another couple of 100,000 at 19.5, 20, 20.5. It's got quite a bit of volume on there to get set, even though it hasn't traded much today. Yeah, so just patience, I think it is, Sharon. So for me, any process of trading is really just getting. I don't, as you probably notice, I don't look for a lot of things that are just trending higher. By trending higher, I mean I'm just trying to think of one. Let's just see if SM1 had that opportunity. Probably this, to buy in here on SM1, for example, Synlait milk. That could have been a continuation trade. I don't potentially look at continuation trades. So taking part of that leg up, I like to look for a market that's coming out of contraction. It's a longer term contraction. So I just think the payout to get into those zones, say on this one, was potentially through 675 or even with a push up through 750. The payout in here is going to be higher because you're looking for a major leg up rather than getting involved late into that zone. I mean, it could always pay out okay, but I think it's not going to be as good a payout as it is when you're trying to get a market which is going into contraction and starting to come out the other end as buyers start to support higher levels, build a nice little base. They start to support it. They start to step in a bit more force. You start get your higher lows, and then you're buying earlier into that trend up. That's what I like to do. So with what was it? And that's what I think potentially is with Fastbrick. We've got that contraction lower, we're starting to break up out of contraction. So the next step is just looking for that entry setup. All right. FBR, NST. Hit enter. There we go. Northern Star. This has been a good little one. So this one, if you look at it, it's just pretty much what we're saying. That trend up, I just cannot bring myself to buy that. And there's, even though it is trending higher, I'm not a big fan in that because I think potentially, what goes through my head, how much more have you got of this trend up? How much further could it go higher? Is it a great spot to buy? Is it a great time to buy? We're up at $6, roughly 6.35. And this leg up started at $3, so it's $3.35 up from where the origination point of that move. So how much how much further can this leg go? I mean, that's what goes through my head. So I would have to allocate a lower probability continuation trade for this just by looking at that weekly. It doesn't mean that you can't make some gains out of it. I mean, if I thought that back here, I mean, that would have been a nice little, say, this is a prime spot. I'll just draw that up. This is a prime little entry, even though this was late into the trend. That entry just in there, we can all see the market's popped up. You know, it's had this sort of contraction through here, but really that's only come down and retested the anchor. Then we popped up. At that stage when it was coming, when it was just before we broke up and out and through, it could have easily rolled over from here, but instead it's held and it's broken up through the highs. Beautiful entry. You know exactly where your risk is. You got small risk on that, looking for a break up and through. So your really only problem would have been that it just comes up, you know, you enter here, stops at the previous highs and then rolls over and has a deep correction, you get stopped out. That was your own, but you're not taking a lot of risk. But that's all within that longer term trend up. But I still, I mean, I probably would have had problems. I don't know if I was looking at that at that stage. I probably would have had problems buying that because we still are late into that weekly trend up. But again, you know, I was wrong. It did continue high. You got all the way up to $7. So you could have taken, you know, that was 3 or 4 to 1 on that trade. You know, your risk here to reward, even if you got up here, it's probably 2 or 3 to 1, 2.5 to 1. If you took some off here, maybe if your stop could be here. So it is, you know, it is a profitable trade. Talking in terms of what could be happening now, we've had this move down, pop up. It's really just oscillating between 650 and your key low is going to be at 615. If that rolls over, so I think this could go either way for me just by looking at this. If I want this continuation trade, I want to be part of this. If it breaks down even through 625, I'd be concerned about it because, oh, maybe, yeah, say, let's just draw that up. I just want to draw that line. I'm a stickler for touching the lows. All right, there you go. That's probably a bit clearer. So for me, it could chop around through here, still hold that level, hold 650. So you really want to see, it go either way. So from here, we've had this push down to 650, 620, had a move up, pull back here, popped up through the high slightly, had a deeper pullback, then we're back up there now. So I really just want to see, you know, I want to see a move up, and then I want to see maybe this, and then I've got my buy entry and my risk. Something like that would be ideal, up and out, that's within this high here, and then you're just looking to see if we get the same sort of price action as this. Well, if we get this type of setup just below the highs, which is below $7, like this, you get a pop up and through 650, maybe touching the 660 before we have this little pullback to build your higher low. If we get the higher low, it's worth the risk because you're not going to allocate too much risk to it. You know exactly where your risk is, and then you'll be watching carefully to see if it can extend up and through $7. So definitely, this has the possibility to be that longer term continuation trade. But again, I just could never get my head around being late into a trade. I'd rather look somewhere else. Now, if there's nothing else around, look, it could be worth easily just having that as a little setup, having it on your cards. Excuse me. Does that make sense there, John? FDM. Now, this is a bit like what we just mentioned with Sharon's one, was it FBR? The way I'm viewing this, it's drop it down to the weekly. The weekly looks good. You can see this push up here. Was it Freedom Oil and Gas? Okay, that had a good rally. And this kind of movement it's holding these highs. It's pretty much holding around those highs. So a strong market, if it's going to hold the highs, that's great. You know, a strong market's going to hold the highs. People are not going to get out. There's not going to be too many people come out. So sooner or later, the buyers are going to have to realize that if they're waiting for a big pullback to 20 cents, they want to buy. Okay, I want a 50% retracement. That's my Fibonacci level, whatever you want. I want to buy there and there, and then I want my setup to be down at 20 cents, or just bang, put a buy in at 20 cents. When it's a strong market, it doesn't necessarily pull back. It's showing its hand. The more price action is up around that 30 to 27.5 to 30 cent zone, it is showing its hand because it's holding the highs, and sellers are not willing to get out. Or they're not being squeezed out. They're not being forced out anyway. So it's holding up a level, and then buyers are going to have to start reassessing, going, oh, look, that 20 cent move, pull back to 20 cents, probably not going to happen because you're starting to see higher lows holding. So if we get into the daily, I think your first sort of a sign, it's not key, and this is where I'd hate to think anyone getting sucked into a trade. There's those few factors. So we got this move up here, probably not an anchor. Well, it's probably an anchor here before you had this move up. Then we've had a pullback, some minor little level, lower high, cleaned out this level through here, but really not much. It probably overall. And then you've got this pop up here, retest the low. It's had to have a deeper correction. Now, just because it's broken through here doesn't mean it's a buy. And that's where I like to bring across the tops. And this is where it was like, I was saying FBR previously. It can still contract, so you can do this, pop out through that lower high. You go, okay, now I'm looking for my entry. I've got that break up out of contraction. Not so. The contraction is still happening. It still hasn't broken up out of contraction. So it could extend up here, touch at 32, and then roll over for a deeper pullback, take out 28, because it hasn't broke out of contraction. So when it doesn't break out of contraction, it's not showing that sellers are getting cleaned up. They're not losing control. It's not a sign that buyers are taking control. It's really nothing just yet. This could take a long time to play out, as long as say that 28 zone, 27 zone holds up. If it holds up here, it can easily, so we've got that press down, that pop up, retest. That's it, retest just here, and then we've got that deeper pullback. It may just be having that deeper pullback, touch up on this resistance before blasting through 28. You don't know. So I really just want to see, even if we take out here, I want to see it pop up out of there. And then I'll be looking for maybe an entry setup. I want to see it push up out of the contraction, potentially to 34. Who knows? But that's what I'll be looking at on FDM. That's, for me, that's a good sign that buyers are taking control when you get pushing up out of contraction. And then anyone selling was going to have to start to think about it, going, oh, hang on a sec, what am I selling for? Maybe I'll hold on to it. Anyone that's waiting for that pullback to 20 again, they're looking at it going, oh, it's breaking up out of contraction. Oh, geez, maybe that pullback's not to 20 cents is not playing out. I'll have to chase it higher. And that's when you get that acceleration as people start to chase it higher, realizing if they wanted to be in this, realizing they're wrong. That makes sense there anyway. That was FDM. So in essence, I'm just holding off on that one after all that. So what do we got? Just quickly click over Lawrence then. First, was it PRU? PRU. All right. So look, I've been watching this one, and what I don't like about it, on a weekly basis, it's coming up into a clear resistance zone towards, I mean, there's no reason why you can't make money off it, but I just think this gets choppy when you got weekly price action that's pretty much contained through here. You know, you've got that sort of zone through here, then you've got a support zone around 20 cents. This is not bad. The fact that we've just started to hold, you know, around that, we held that 30 zone and we're starting to lift off 30, but it doesn't mean that it's tried a few times and you're going to have this deeper correction, and it's all in context of the longer term sellers at 65, say, and then it may start to roll over. So sometimes when it tries, you know, you try a few times to get through a support zone, it has to have a deeper correction. And that's when you get a few more buys and it turns around and reverses on them. And then it's got enough oomph as that buyers who've been buying off this support, it's got enough oomph to them to have to sell and get cleaned up and really accelerate through support. That could easily happen. So, excuse me, from here, the price action is not quite strong enough for me to warrant a trade to think that it's going to get up through 65. Does that make sense? Looking at the daily, I mean, that's just your weekly. And we're getting, you know, with this move up, this recent move up, what was it, a couple of weeks ago, up through 50 cents. We're only at 47.5 now, that 50 cent. It's extended. It's taken a bit of buying pressure just to get up there. Now, in context of this weekly chart, that's not getting up towards 65, 70, is it? It's finding weakness. So if you go to the daily, yeah, the daily trend is higher. We're probably in contraction mode here, so we want to bounce off the MAs maybe. We want to find this potentially reversion to the mean, or if it starts having a deeper correction, then I'll be thinking that it's going to be a lower high following and we're going to start to roll over, and it's going to play out with a decent rollover on the weekly basis, because that is, you know, in the overextended mark. But definitely one just to have your eye on, and that's probably the one key thing I see supporting it is the fact that it's that 30 cent mark. It's lifted off 30. yeah, no, it's not. It's worth. I've got my eye on that too, Laurent. By the way, I just don't see the strength in it just yet, and I couldn't have bought it here. I didn't like it here, and that before you got a thump up there. Maybe in here would have been a nice little entry, and that's probably about the only prime entry I see for the way I'm looking at it. Trades I look at. What was next? Perseus, SHU. It's gonna be wary of the time. All right. Oh, is that right? SHJ. I was going to say you wouldn't be trading this. Yep, trend is up. That's just by looking at this price action. That looks a lot nicer. And I like these. You know, it's had a good run up here. Okay, you got a good sell off back in September last year, and then you can see it's holding higher lows. And then this, you can see when the entries play out nicely. Just look at. I just want to show you. I love these kind of entries. So if the market was weak and it was, you know, fundamentals are weak, whatever, you're going to get this market. It's cleaned out a lot, and that's pretty much come back down to. I'd say that's your anchor to this move up because this leg up didn't really change. Had a good leg up, good pullback to say 55, another good leg up, and with this selling, this selling pressure, it's all just led down to retest the support. Then it started lifting. You can see this is lifting again, and you've had this move up here, and then you had this type of play out again, really down to a support zone. Can everyone see that on a smaller scale? But this is a beautiful, this entry here. And what this kind of entry gives you is this just taking minimal risk. I know this is in hindsight, and we weren't going to know that that was going to play out like that. But the fact that it's holding high lows all the way through here, and you're getting the sellers are still coming in, but the sellers are slow, you know, bit by bit they're running out of energy, they're running out of the pressure. And with this, this kind of setup, if everyone can see that through here with a break up through 70, it's beautiful because you can see the volatilities come out and the swings over the last few days haven't been very big at all. The buyers are stepping in. You can see even just in here, buyers are stepping in through here. That's awesome. That's just a prime setup. And this previous high, well and truly in context to that, the latest high at 87.5, that's quite nice. Buyers are really taking control all the way through here. And that's after a big washout. So that just leads you to believe that that move down there is a big washout. It's cleaned out a lot of traders. A lot of the buyers maybe have had it for a while, or they bought it through, with this little pop up here, or even bought it through this pop up here. That's cleaned them out. They're starting to they're watching it. They're edging back in. A lot more buyers are coming back in, and then you got this acceleration. So when you get a couple of days, the way it accelerates, even after a couple of days, you could sit there and go, look, I'm on a good thing here, and you know that entry's played out nicely, not taking barely any risk at all, and your target's going to be up to at least that 85. You probably could have taken some off there, and in essence, blew straight through. Had a good correction, but we are still on the way higher. But it's just you're getting these more savage moves. Good move up. Of course, the move up like that hasn't really looked back. You're going to get a decent correction back to the MAs because really getting ahead of itself. But then it started lifting again. You had another little entry through here, and a re-entry up there. So yeah, that's nice. It's heading higher. I potentially would be looking for an entry. I don't see it playing out just yet. For me, I just want to see, we've had this pullback from the highs, little pop up. I want to see maybe something like that before I'm looking to really minimize my risk. I'm on the right side. The market's lifting. It's starting to rise, and just see where it can go to. IFM. That's another good one. Good work, Laurent. Weekly. Oh, you can see that price action through here, way back from 2016. Start of 2016 has been really well contained. Bit different to seeing this type of action, the way it moved up. But in essence, that's longer term. It keeps holding higher lows. You can obviously see the support through here. Most recent high low around 80. It's got a bit ahead of itself from this pop up through 89. The recent lower high just in here, you can see with this move up. So probably I'd be expecting it to more. We just draw that. What does it keep going there? So if that's your trend there, I'm expecting more. You got this. I'm expecting a deeper correction. So I'd like to see a deeper correction and buy maybe somewhere if retest down at 82, and then buy it when you get a little inside higher low. That's what I'd love to do off this one, because I think buying it, I wouldn't expect that to start breaking up through 91 from here, just because of the recent, that little same. You can see it's curved up here. It got ahead of itself, and it got a lot of chop through here and a decent correction. And that goes in the context of what the weekly's been doing. It hasn't taken out the highs too much. They're having deeper correction, but it is holding a long-term weekly trend up. So if you're looking for that same sort of structure to play out, exactly the same, that leads me to believe that we're either going to get choppy through like this, and then get a bit choppy, and then maybe spikes to the downside, and then looking for an entry potentially like this. But I think it's got a long time to play out yet. So yeah, keep it on the radar, obviously, but just be wary that it could go deeper. I wouldn't be looking for a buy entry just up here. I think you get squeezed out pretty easy. NST, did we just do that one? Done that one, John. Okay, OS Alan, OSH. Let's have a look at that. Good work, Lauren. This is an interesting one. Longer term, I mean, you can go back to just go to the monthly. Longer term, that looks good. You can see it's rolling. You can see this sort of cup forming. I like that. And if you draw that, I know it's a monthly chart, but it's all the same to me. Chart's a chart. I'm looking for the same type of price action. You got that there, so you can see that quite clearly. If you had this move down, try to pop up a good extension down, and this you can see how it's whippy, and then the volatility slowly coming out, and it's probably we'll get onto the weekly. My problem with this, I'd be obviously just keep an eye on this one, and this probably plays. I like oil, but oil's also what we call a crowded trade. It's already has a lot of buyers in there, so you'd expect it to keep grinding higher. For oil just to keep grinding higher might be a tough ask. So in that respect, when you look at these companies that are oil based, if oil does have a bit of a rollover, it's got to squeeze out a few of these long traders or the last longs to have a decent pullback, build a new base for a new leg up. You'd expect potentially these ones to start suffering a bit as well. But you can see $6, it's been holding. But this is whippy price action. It's getting a bit choppy. It's only lately with this move up here that we've broken out probably to the upside, had a pullback. That's your high low at 7. But that pullback there went from overbought to oversold. And then we're back to overbought again, and we're struggling to get up towards the highs. So we may get a bit choppy again. This may be a lower high, and it takes us back through $7. We don't know. And there's a key level up, 825, I think 830 of this high. We've got to be concerned with, because that's still, I'm just trying to say, that's before it got choppy. So there's going to be a resistance up there. So if this does kick on, it's probably not going to go too far. I'm just trying to piece it all together with this stochastics, how much buying pressure it's taken. And that would lead me to believe if oil's struggling, it could get up to this recent high, say at 820, 815, 820, before we have a reaction lower. So ideally, I would be looking for anyway a pullback. I don't care if it goes through there, if it pulls back from where it is. I'll be looking for a higher low, because I like this higher low in here. So I think it can have a deeper correction, a deeper pullback, and then really I want to see a bit more of a squeeze between buyers and sellers, and then acceleration up. And then I think if you get that and higher lows hold, even if there's lower highs squeeze in, you get that point of agreement before it starts turning back up again. Does that make sense there, John? No, Alan? So yeah, that's what I'd ideally be looking for. I think it's getting a bit extended up here. And that's your weekly, I think, isn't it? That's your weekly. So the daily, I mean, you can look at the daily, it's overbought as well. The weekly is getting to that overbought zone. So for me, again, your probability of that going higher through those highs is low. So if it's a low probability trade, I'm not even bothering to look at it just yet. But you've got to remember that it's something to have on the radar, because it held that higher low at 7. So it's definitely, and it's starting to look like longer term it's curving up. I think there's a lot more work to do before this becomes something that's going to start trending higher. But again, we're trying to get ourselves in the early stages of a trend at a how do you say, high probability of success, a low probability that it's going to turn on us. Does that make sense? So for me, this weekly chart is starting to build, but we're starting to build. I think it's got a lot more work to do, but I think we get in a nice entry here, and we're starting to show this is the start of a trend up. We've got the meat of the trend that we can take and book, as opposed to potentially getting late into that trend and we get stopped out a couple of times before we get it right. It's just not worth it. All right, might have to call it a day there, guys. I think we got through everything. Yeah, that's about it. I think if there's something I've missed, which I'm pretty sure I haven't, just email me through to support@tradesetup.com.au and we'll get through it. Anyway, thanks very much for joining me, guys. Let's see how the next few days play out. See if just be wary. If this is a bit of window dressing, we'll probably give up these gains tomorrow, especially if the US rolls over tonight. So just keep an eye on that. But anyway, we'll see how the US goes. If the bonds, keep drifting lower, we might get another push up in the US. I'm not expecting any serious gains to kick on, and I think anything that does kick on, like a couple hundred points, next few days it could drift lower again, and then we might have another couple hundred points to take us back up to the highs. Who knows what's going to happen? But yeah, just be wary. Just keep an eye on what's happening in the US, what news is coming out there, and then we'll see where we're at on Thursday. Anyway, just by the way, just while I remember, look at the CCAs, that stock we've been watching. That's kicked up quite nicely, and it's looking like it's getting a bit of a run on. And you can see the volume that come in. What was it, the 27th Friday? It was big volume. So just be wary if you're if you're following the story on CCA and Ivy Coin. This is getting a bit of a run on. Maybe there's some bigger players starting to step in now, starting to take a notice of it. Because just remember, if I think their market cap was somewhere around, if I'm right, on Change Financial, somewhere around 20 mil. I don't know. Now on their tokens, if they sell out at current market, they've got more than that, in US. So it's a good thing. And look, it's just starting to get that run on now. So this could easily accelerate. It could be a couple of bucks over the longer term, a couple of bucks share. And if we start seeing volumes keep stepping in, look, it's looking good. There could be an announcement on the cards too on this. So, and that would probably flow from Ivy Coin if there's a good announcement on Ivy Coin. So we're basically with Ivy Coin, the tokens, we're just waiting for them to hit a major exchange. If they hit a major exchange, generally any sort of cryptocurrency hits a big exchange, they get a good kick on in price. And if they get a good kick on, it's worth millions to CCA. because they hold quite a few millions of coins, actually, 100 and something million, I think, tokens. So it's like shares. So anyway, just keep an eye on that code if you want. If something pops up and it looks quite good, we're going to alert it anyway. But yeah, just something to keep on the radar. All right, guys, thanks very much for joining. We're back in on Thursday. We'll speak to you then. Cheers, guys. Bye.